Why are EV stocks crashing? What is happening, investors? It is your boy Jack. I am not a financial advisor, and today that's the topic we're going to be speaking about. We're going to be looking at the state of the overall EV market and trying to figure out why these things are actually happening. And there's a few things in particular I want to speak through, okay? One of them is this, which I'm pretty sure everybody involved in the stock market is going to be aware of. Electric vehicle stocks followed Tesla lower after a fatal Model S crash. Now, crashes happen every single day, okay, by every single car manufacturer, but when Tesla is leading this whole EV revolution, and when autonomy is one of the biggest speaking points when it comes to Tesla, you're going to get headlines like this every single time. Now, this has been fully addressed by Elon Musk, and it's nothing to do with autonomy or anything of the likes, but these are the kind of headlines we're going to be seeing. But the main reason I have this up here is look at all of these tickers and all of that red. So we're going to speak about why this is happening, and hopefully through doing that we can understand when we can potentially expect these companies, to begin to start a proper recovery. So my friends, right before we do get into today's video, could I please ask you to hit that juicy like button? Maybe drop me a comment down below. Let me know, what are you doing with your EV stocks? I genuinely am very interested. Are you buying more? Are you holding? Are you waiting for some more, signs of reversal before you start buying more? I know me personally, I haven't been buying very much over the last couple of weeks at all. About a month ago or so, I did buy into a few more positions, like dollar cost average down. But now I'm kind of playing the long game. I'm waiting it out a little bit. And please, my friend, if you are indeed new around here, hit that juicy red subscribe button and join the family of investors. Why not? Also, if you are interested in joining my private Discord group, that is the first link in the description, my friends. In there, you will get access to all of my buy and sell alerts when I start buying more things again. Join an awesome community, get to speak about stocks all day, every day. And if you like 2 free stocks on Webull, all you gotta do is sign up and deposit $100. It's literal free money, baby. So this right here is the first headline of today. Electric vehicle stocks follow Tesla lower after a fatal Model S crash. Now, obviously, that's a terrible headline to read. But just look at some of these notable decliners across the EV space industry. FUV 12%, Ride 9%, QS 10%, Workhorse 10%, Blink 7.6%. The list really does go on and on. And Tesla, that same day, was down 5%. And Tesla is one of the few EV stocks who's actually performed not too horrifically over the last, 4 to 6 weeks or so. Now, what I want to do, first of all, is I want to speak about this crash. So shares of Tesla closed down 3.4% after the National Highway Transportation Safety Administration said it had launched a probe into the crash. And I mean, this is to be expected. It's Tesla, it's at the forefront of autonomy, whatever. But Elon Musk did come out in regards to this crash, and he tweeted, okay, that the initial data accessed by the company indicates the vehicle didn't have its autopilot driver assistance technology enabled. So I mean, this was just human error, and I mean, as sad as it is, that literally happens every single day, and it's nothing to do with Tesla, their technology, or the vehicle. Data logs recovered so far show that autopilot wasn't engaged and that the owner of the car hadn't purchased a full self-driving option to enhance its functionality. Also, standard autopilot would require lane lines to turn on, which this street did not have. So simply put, it was human error, and that happens every single day. But when it does come to an EV company or a Tesla or anything like that, things like this hit the news. And the fact that we get news like this so infrequently should actually be seen, as a strength when it does come to Tesla's vehicles. Now, what has happened here is local police said that no one was driving the vehicle, and the deceased occupants were found in the front passenger seat and rear seat. The fact that no one was behind the wheel of the vehicle prompted speculation as to whether the autopilot feature had been engaged and improperly used. Look, regardless, Elon Musk said, there was no lines on the street, so autopilot couldn't have been engaged. And it is also said that when autopilot is engaged, you still have to be behind the wheel, quite evidently. But moving on from the whole Tesla situation, okay, NIO, LI, XPEP, CCIV, why are EV stocks down? Well, one thing that's going on and has been going on for a considerable period of time is a global chip shortage, okay, which continues to supply downside pressure as well. I mean, this has been going on for months and months and months. General Motors announced a halt in production at several North American plants, and Ford announced additional downtime at 2 plants, the latest disruptions to the auto supply chain because of a chip shortage. This is just recently. This has been happening constantly with a large majority of automakers out there lately, my friends. Aside from that, investors appear to be concerned about the ability of these EV players to hit aggressive growth targets upon which their valuations are based. And this is one very, very real reason I personally believe why this, crash in the EV sector has happened. There was a lot of hype for a very long time, okay? And I mean, rightfully so. The large majority of these stocks are still up absolutely massively from where they were only a year ago. Not all of them, but the large majority are. And I would be willing to bet that in another 5 years, the large majority of them will be up hundreds more percent once more from where they stand today. When it comes to something such as EV, when it comes to something that's innovative, that's going to literally change the world, it is going to go through its ups and downs. It's going to go through phases of investor confidence and stages where investors aren't so confident. And I think that is largely what we are seeing right now. I think a lot of the time people kind of seem to forget the world we're living in right now. There's still a lot of issues going on all over the world in regards to the Roni. But despite everything, the last 2 quarters for, you know, the bigger EV guys, at the very least, let's say Tesla, NIO, some of the Chinese guys, have been very, very good. Literally the best quarters we have ever seen. People were investing 9 to 12 months ago based on what we were hoping was going to happen the quarter that is just gone, especially in regards to the likes of Tesla, NIO, but also in the quarters that are going to come next year and 2 years and 3 years down the line. And everything that's been shown to us over the last couple of quarters in particular has shown us that, you know, these companies are executing. They are still trading at insane multiples, and I don't think that's going to change for a very, very long time. And what it looks like to me, quite simply put, is that valuations finally caught up with a lot of these EV companies. And don't get me wrong, that does not necessarily mean that now they are at good or fair value. A lot of them still trade at high multiples, even after 30 to 40% pullbacks. But things are making a little bit more sense. You're always going to pay a little bit more of a premium for companies such as ones in the EV space that have all of that long-term potential. I think everybody knows what's been going on with the treasury yield as well. We also know that a lot of the EV stocks that people are investing in right now are, you know, startups, or else, you know, really at the start of their production phase. And simply put, they're going to need capital. And with treasury yields going up, more than likely it's going to get more expensive for these companies to get their capital down the line, which again does play into the valuations with some of these, you know, relatively newer companies at the very least. But guys, if you just go back at any of the big players and even a lot of the smaller players, okay, and just go back towards January, February, even December, where a lot of these stocks were, you know, a lot more expensive than they are right now. We see NIO was up 40% from where it is now. If you go back and look at something like Fintel, this is for NIO. I mean, you can see a lot of institutions, etc., were buying NIO at those very high prices. And I mean, the list goes on and on. Look, there are some sells here and there, but the point stands, there's a lot of buys. And if we bring you to current day, everything looks the same. There's buys and there's sells. I mean, in March, there was an awful lot of buys. And this is going to stand true for an awful lot of EV related companies. I think we've all seen a rotation, a shift happening in the stock market as of late. You know, it happened back in March. It went from growth, tech, etc. All of that sold off. A lot of money went into recovery. Then it went from recovery back to growth, tech, etc. Then there was a lot of money being pumped into EV. Genomics had a good few months. It's cyclical. But go back to the first time you decided you wanted to be an EV investor. You wanted to invest a portion of your portfolio into EV stocks. I bet you one of the reasons for that was because you thought that down the line, in 5 or 10 years, there's going to be a lot more electric vehicles on the roads. And the facts and figures are out there. They stand for themselves. They speak for themselves. That is going to be the case. And we are seeing absolutely huge growth across the industry every single year without fail. Go look at any big blue chip, okay? Go look at your Facebook, your Amazons, your Apples, etc. Really safe companies. Look at Johnson & Johnson's, Procter & Gamble's. They are going to go through huge dips over the long term as well. I mean, look at that Johnson & Johnson 5-year chart. There's a 20% dip. Here is a near 20% dip. There's a near 20% dip. Like, you know what I mean? So if you are a long-term investor, okay, we should understand why this sell-off is happening. It largely is due to valuations, the chip shortage, increased competition as well from legacy automakers, etc, etc. But in the long term, if you are choosing quality companies that you believe in for the long term, especially the ones who already are well established, the likes of Tesla, NIO, etc, more than likely you're going to make a lot of money in the years to come. Of course, when you're playing the more speculative ones, anything can happen, especially in the short term. But, you know, stay diversified, my friends. But anyway, guys, that's my video on this. That's my video on what I think about this. Again, the media still has some tendencies to be quite biased against EV stocks in general, as we can see with the whole Tesla situation that's going on right now. I'm sure this is going to just pass by. But that's the way it is right now. But if you watched till the end, you, my friend, are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me. If you enjoyed the video, perhaps took some value or some insight from the video, could I please ask you to hit that juicy like button? Maybe drop me a little comment down below, and please, my friend, subscribe if you're new around here. Again, if you are interested in joining that private Discord group, that's the first link in the description. And if you like those free stocks on Webull, that's the second link. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.